Imagine this, a fancy Parisian restaurant with candlelit tables, ornate feather decorations on the walls, and three men taking a friendly photo together. Behind those smiles lies the beginning of a $17 million insider trading scheme that would span continents. This isn't a movie plot, friends. It's real-life financial crime that just got busted. And today, we're diving deep into how it all went down. Hey friends, welcome back to the channel. I'm Iggy from the Investing Iguana, where I break down stocks, finance, CPF, and everything related to growing your wealth in ways that actually make sense. We're ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 950,000 reads and 57,000 likes. I've created more than 800 videos with over 380,000 watch hours as of May 2025. And hey, for just $1 a month, you can join our membership and get exclusive daily insights that go beyond what I share here. Like yesterday's breakdown of exactly how insider trading investigations work from a legal perspective. But more on that later. Let's get into today's story. This global financial crime saga starts in November 2016 at a place called Hexagon, a now closed Michelin-starred restaurant in Paris that was owned by a former Merrill Lynch investment banker named Sami Khawaja. A day trader named Safi, nicknamed Yummy, invited a guy named Iggy to travel from Italy to Paris for what would become a life-changing lunch meeting. "Friday, you will be welcome to our world of business," Safi told Gay in a Facebook message before they met. Pretty ominous, right? What kind of business do you think they were planning? Drop your guesses in the comments. To celebrate their meeting, Safi took a photo of the three of them at the restaurant. In the picture, Jay had a big smile while posing with his new business partners. Behind them were those fancy candlelit tables, huge mirrors, and decorative feather artwork on the walls. Little did they know, this casual photo would later become evidence in a Department of Justice investigation. After that Paris lunch, Gay apparently wasted no time getting to work. The group started exchanging messages more frequently, using code words like shoes and running, which prosecutors say was their way of talking about using disposable burner phones for their insider trading communications. It's like something straight out of a spy movie, isn't it? They then allegedly contacted someone in Singapore to share non-public information about a $470 million acquisition in the food sector that would be announced 2 months later. Can you imagine knowing about a major market-moving deal months before anyone else? That's the unfair advantage these guys allegedly gave themselves. Soon after, Gay and Safi were jetting across the world, traveling through Dubai to Singapore and Hong Kong for meetings. According to the Department of Justice, G's job was to find more traders by passing on tips from Safi and asking for 50% of the profits as kickbacks. Talk about a greedy arrangement. After the food company deal was announced in January 2017, GA reportedly bragged to one of his Singapore contacts that more insider information was coming. "This is just one deal," he said in a message that's now part of the U.S. case. You might be wondering how they got caught. Well, the U.S. authorities finally shut down the operation by arresting Safi in Zurich and Gay in Singapore. This shows how serious U.S. financial authorities are about stopping financial crimes, even when they happen overseas. Federal prosecutors in Boston and the SEC accused Safi, GA, and a third trader named Ronald Cordes of making about $8 million from their biggest score, trading Tiffany & Co. stock before LVMH announced plans to buy it. Here's where it gets interesting for anyone who follows financial crimes. Cordes pleaded guilty and is now cooperating with investigators. In my experience covering these cases, having an insider flip and cooperate often breaks the whole case wide open. The allegations were made public in March and showed that Safi, who's 37, appeared in a Boston court on February 27th and pleaded not guilty to money laundering and securities fraud charges. Meanwhile, Gay is still in Singapore fighting extradition and hasn't entered a plea yet. French prosecutors have also been running their own investigation for years, but haven't made any public accusations or filed charges yet. Now, what about Khawaja, the restaurant owner? He wasn't charged in the U.S. case and isn't named directly in the DOJ files, but his work history matches co-conspirator 1 mentioned in the indictment. People familiar with the case confirmed it's him. Khawaja worked at Merrill Lynch until 2014 before opening the Hexagon restaurant. In total, the U.S. listed 11 alleged co-conspirators, with most of them living in Singapore. Does this make you wonder how many other similar schemes might be operating right now? I sure do. And that's exactly why I research unusual market movements for our premium members every single day. Khawaja's lawyer, Dominique Inshauspe, said he hadn't received any information from the U.S. and added that his client has never committed any offenses of any kind. Safi and Gay didn't respond to requests for comment when contacted through LinkedIn, companies connected to them, or through lawyers. U.S. authorities have made the conversations at the Hexagon restaurant a key part of their case. They connect Safi and Khawaja to the alleged source of 5 insider tips. This tipster, called co-conspirator 2 by the DOJ, is Francois-Regis Robert, according to people familiar with the case. Neither U.S. prosecutors nor the SEC name him directly, and Robert hasn't been publicly charged in France or the U.S. for any role in the alleged scheme. His work history matches an unnamed in-house deal advisor for companies called Athos SE and later Worldline SA that U.S. officials mention in their complaints. That person previously worked at Merrill Lynch in France, connecting the dots yet. France is also investigating Robert's potential role as the source of millions of euros in insider trading profits, including 2 deal announcements the U.S. is examining. French officials raided Robert's Paris home in 2024, looking for evidence of communication with Khawaja about suspicious trading profits made by Safi and 2 others. At the time of the raid, Robert's lawyers denied any wrongdoing and said the French investigation would show any possible allegations were unsubstantiated. When asked about the newer U.S. cases, his attorney, Edward Heilbrook, said, "My client has no knowledge of this procedure and is not a party to it." Let's talk about how Cordis got involved. He was also allegedly recruited over a meal at Hexagon. GE arranged the meeting in mid-2017 after meeting the US-based entrepreneur during a trip to Los Angeles. GE was there trying to develop a film script he had written. From insider trading to screenplay writing, talk about a career pivot attempt, GA reportedly told Safi in messages that he felt comfortable about Cordis, adding that he's not super big size, but he's legit. In Paris, Safi greeted Cordis with champagne and sent Gay a photo of them raising a toast. GA's response? Boom. You guys look great. After these introductions, the U.S. alleges Safi, Gay, and Cordis made more than $2 million from Robert's tips. These included trades on a company called Ingenico before its $7.8 billion acquisition by Worldline in 2020. Safi asked Cordis shortly after to wire $300,000 to a Hong Kong associate, explaining he would pass on the gift by paying his sources of inside information, according to the SEC. Safi, Gay, and Cordis are accused of making millions more, including the Tiffany trades, from different sources. Over time, Cordis apparently took bigger bets. In one case, Cordis messaged a friend saying, "Urgent. Buy Tiffany company symbol is TIFF. Load the truck up." That's about as subtle as a sledgehammer, isn't it? Hardly the kind of careful approach you'd expect from someone trying to hide illegal activity. Cordis has pleaded guilty to conspiracy to commit securities fraud and is cooperating with authorities, according to the U.S. criminal complaint. His LinkedIn profile shows a career in branding and sales in the silicone tape industry that ended in 2019. On his profile, he wrote, "Now retired and enjoying my life." Well, that retirement has taken an unexpected turn. Meanwhile, GE's role evolved over time. The DOJ said he tried to find new sources of confidential information, once telling an actor friend in New York that he was looking for investment bankers in big banks working in M&A specifically, just casually asking friends if they know any bankers willing to commit financial crimes. You know, as one does. According to prosecutors, his willingness to trade on insider information led to bigger wins. His largest profit allegedly came from the last trade outlined in the indictment, where he collected some $3.8 million in February 2024 with trades on German biotech Morphosys just before Novartis announced its acquisition. As their profits grew, so did their paranoia. When Gay first connected with Cordis, Safi warned him, "With Americans, you always need to be careful. Never trust them," according to messages in the indictment. GE later suggested to Cordis, "Better not tell your wife," and added that it might be a bit dangerous. They also took extra precautions after French authorities charged Khawaja in 2018 for insider trading in a separate case. That investigation is still ongoing, with no decision yet on whether to hold a trial. Khawaja's lawyer maintains his client never committed any crimes. We need to delete our old group chat from our intro last summer, Cordes said to Gay in a message after speaking with Safi. He says we should also delete our chat here, you and me, because his name might have been mentioned. Because, deleting chat messages makes them disappear forever from servers and forensic investigation tools, right? That was sarcasm, friends. What can we learn from this wild story? First, insider trading schemes, no matter how sophisticated, eventually get caught. The SEC and DOJ have become increasingly effective at tracking international financial crimes. Second, the penalties are severe. We're talking potential prison time and massive fines. And third, the more people involved in a scheme, the more likely someone will flip and cooperate. Before I wrap up, I'd like to know, what part of this insider trading scheme surprised you the most? Was it the international scope, the amount of money involved, or the careless way they communicated? Drop your thoughts in the comments. If you enjoyed this video, check out my related breakdown on how institutional investors legally get market advantages. It's eye-opening and will help you understand how to better position your own investments. Remember, financial success doesn't require breaking the law or having insider connections. It requires consistent learning, strategic thinking, and access to quality information, exactly what our $1 membership provides. The join button is right below this video, and I'd love to welcome you to our growing community of smart investors. Thanks for watching, friends. This is Iggy from the Investing Iguana, and I'll see you in the next video. Or better yet, in our members-only community.